Hey, it is Troy Stavros, and it is time for our monthly market update, looking at all the data through the end of August and seeing what is going on in the greater East Tennessee and then narrowed down to the Knoxville, Tennessee real estate market. Let's jump in and take a look. Okay, first thing I want to talk about is what has happened over the last month since our last market update with the mortgage interest rate. You can see that it had a waterfall dive right here. Back in August, we were up here around about 6.5%, 6.63%. Before that, in July, we were up closer to 7%. Back July 15th, we were at 6.85%. But you can see that it has fallen significantly, and that on Tuesday, September 2nd, it had a big fall, and now it is currently sitting at 6.29%. And that's something that's going to be important when we talk about what is happening in the market and what we can expect to see. So let's jump in and start taking a look at that. But let's remember, we had this big drop in the mortgage interest rate, which is good news for buyers. All right, let's jump over and start taking a look at the data. Okay, when we're looking at the data here, so we're looking at both East Tennessee and Knoxville data. So what we're going to do is we're going to talk about first what the similarities are, and then we'll break down some of the differences between the two. But overall, there are a lot of similarities with what is going on in the market in greater East Tennessee and in Knoxville, Tennessee. So as far as the economic and market context, the following things apply to both markets. So mortgage rates have dropped, like we said, in the low 6% range. So as of Friday, it was 6.29%. That improves affordability and monthly payments for buyers. On a $400,000 loan, this could be $300 to $350 difference in your mortgage payment from where it dropped from the higher rate. So great news for buyers. Also, recently, labor market data is a growing concern. The national job growth over the last year was revised sharply lower recently. Plus, there were only 22,000 jobs added in August and a significant downward revision in the sectors like leisure, hospitality, retail, and business services. So we need to keep that in mind, that while it's great that we had the interest rate drop, there was also some negative labor market data that could affect the market. Buyer confidence is mixed. It's improved by the rate relief, but tempered by employment insecurity. The inventory is elevated across both markets, East Tennessee and Knoxville, providing buyers with more choices and reducing urgency. So not only do buyers have more choices, which is great, but it also isn't making them feel like they need to go out and do something very quickly. So it's increasing the amount of time on the market for listings. Days on the market and absorption rates are increasing, signaling a slower pace of sales and movement towards a more balanced or slightly buyer-leaning market. Negotiability is up. The sale to list price ratios are lower, and price reductions and concessions are more common. And lending standards may tighten further due to economic uncertainty, limiting access for marginal buyers. So let's talk about supply, demand, and pricing dynamics that are shared by East Tennessee and Knoxville. So active inventory is high versus last year, keeping upward pressure off of prices and giving buyers leverage. So both East Tennessee and Knoxville are seeing higher inventory than last year, and that is keeping prices flat to rising maybe just a little bit. And we'll talk about that in a minute. New listings remain steady, showing seller engagement. There's not enough new listings to create excess supply. Median sale prices are flat to modestly up, while average sale prices have been buoyed by upper tier transactions. So that means there have been some good sales in the higher priced markets, which have pushed up the average sale prices, but the median sales prices, which is like the average sale price of the homes in the Knoxville area and East Tennessee area have stayed pretty flat. Absorption rates are trending higher year over year, which indicates there's more choices and slower turnover. Days on the market for sold listings have increased substantially, especially for homes not priced to current conditions. So we're seeing longer days on the market for listings. Sellers must be realistic on pricing and incentives, and buyers can negotiate more assertively, especially on stale listings. Okay, so let's look at some of the key differences between Knoxville and East Tennessee. So first, let's look at inventory, absorption rate, and the market speed. So let's look at Knoxville first. The absorption rate was 2.94 months. So that is still somewhat of a seller leaning, but moving towards balance. But that is up 34% year over year. So it's quite a bit higher than it was a year ago. Active listings are at 1,600 with steady but not excessive new supply. The average days on the market in Knoxville was up 35% year over year, coming in at about 46 days on the market. The median days on the market at 22 was up 83% year over year. So you can see things in Knoxville are taking quite a bit longer to sell compared to last year. So the Knoxville market is slightly faster than the broader East Tennessee region, which has a 4.82-month absorption rate and longer days on the market, but both of them are slowing. All right, let's take a look at the East Tennessee region as a whole. The absorption rate for all of East Tennessee came in at 4.82 months. In August of 2025, that's up 27% year over year and close to balanced, potentially tipping buyer-friendly if demand softens. The average days on the market were up 37% year over year, coming in at 63 days, and the median days on the market in the broader East Tennessee market came in at 29 days, which is up 45% year over year. There's more pronounced inventory build and slower pace overall in the wider market versus Knoxville. Okay, pricing trends. In Knoxville, the median list price was down 7.4% year over year, coming in at $415,000. The average sale price was up 10.5% year over year, coming in at $512,654. The median sales price in Knoxville came in at $390,888, which was up 1.5% year over year. And the pricing reflects sharper correction in list prices, with the average sale price buoyed by those upper tier deals. But most sellers are seeing little appreciation in Knoxville. Now, in the greater East Tennessee market, the median list price was $440,000. That's pretty flat year over year. The average sale price was up 6.8% year over year, coming in at $471,398. And the median sale price was up 3.1% year over year, coming in at $376,200. Now, list prices haven't corrected as much as Knoxville, but the pattern of average prices outpacing median is similar. So it's reflecting strength at the top end of the market. The more expensive listings are pulling the average price up, but the median sale price is staying pretty flat with just a little bit of appreciation. How about negotiations and the sale to list price ratios? In Knoxville, the sale to list ratios were between 95 and 97%, which is lower than last year, which means there's more negotiation happening. So it's showing us that there are frequent discounts needed in order to close a property. The median sales prices are often below the median list prices, which show persistent buyer leverage. So we're seeing that buyers are having the ability to negotiate in Knoxville. Now, in greater East Tennessee, the sale to list price ratio was at 95%, also down year over year, showing that more negotiation is happening in the broader East Tennessee market as well. So negotiability is common across the region. Sellers of aging inventory must stay flexible. Okay, market segmentation and buyer behavior. Let's look at Knoxville. So entry-level and mid-market segments, which are about $250,000 to $400,000, are the most sensitive to job market fears. So these buyers benefit from rate relief, which is great with the rates dropping, but they're often sidelined by economic uncertainty. Now, the upper tier sales, which is above 400,000, those drive the average price higher, but the volume of those sales is limited. Homes that are priced right and move-in ready move fastest, and the stale inventory is slow to clear. So price it right from the beginning. In the greater East Tennessee market, there's similar segmentation. Entry and mid-market buyers are most impacted by job and lending trends. The upper tier strength is evident, but it's less concentrated than in Knoxville. We're seeing more upper tier strength in the more urban market of Knoxville. The market is generally a bit slower and more diverse across the greater East Tennessee market. So you're seeing a little bit more stability within Knoxville because of the urban center and the demand there. So things are a little bit looser as you get out away from Knoxville into the other parts of East Tennessee. So what are the risks and outliers for both Knoxville and East Tennessee? List price declines are more pronounced in Knoxville than they are region-wide, which suggests sellers are adjusting expectations faster, or a higher share of affordable product is coming to market. It could be either one of those. Either we're seeing sellers realize that they need to price their homes better, or we're seeing more affordable inventory come on the market, or a combination of those two. Also, in Knoxville, the market is less exposed to deep softening than some rural or outlying counties, thanks to more diversified local demand. In East Tennessee as a whole, the outlying areas may see greater inventory buildup and longer marketing times. The region is somewhat more vulnerable to further economic shocks, particularly outside the major metro of Knoxville. Now, what about strategic guidance for both of these markets? So, for buyers in both Knoxville and East Tennessee, access job security and financial stability first. Don't overextend yourself. You can negotiate confidently on older or price-reduced listings, and you can take advantage of lower rates, but ensure that you have a full pre-approval and keep your contingencies in place. That is important for buyers. For sellers, you want to price to the current market, not to last year's peak. You can expect longer marketing times, and you need to be ready for strategic concessions, be it rate buy-downs or closing credits. And you want to invest in property condition and presentation so you can stand out from the competition. The outlook for what to watch through the end of 2025, you want to watch what pending sales and mortgage applications are doing, and we keep an eye on that for you, so keep an eye on our channel, because those are both early signals for shifts in demand. So if we see pending sales drop and mortgage applications drop, that's telling you that there is a signal that demand is softening. But if you see those increase, then it lets you know that demand is increasing. Good signals for watching the market. Local job market trends are another thing that we want to watch, especially important in entry-level and service sectors. You want to watch inventory build and price reductions, especially if list prices keep falling in Knoxville. Those are things we want to keep an eye on. And then we want to keep an eye on the market speed. Is there any further rise in the days on the market it takes for a home to go under contract, or are absorption signals softening? So those are other things we want to keep an eye on through the end of 2025. And we do that for you every month. So in conclusion, both Knoxville and the broader East Tennessee region are experiencing a market in transition, balancing improved affordability against weaker labor market data and rising inventory. So Knoxville is adjusting more quickly on price and remains a touch more resilient due to diverse demand, but it's not immune to broader economic headwinds. So we want to keep an eye on what is happening in the economy. Success for buyers, sellers, and investors in either market hinges on realism, flexibility, and close attention to both local and macroeconomic trends as the remainder of 2025 unfolds. So we want to keep an eye on what's happening economically, what's happening with interest rates, and what's happening in the local market. Remember, things that happen nationally don't always affect us here in Knoxville, so we want to keep an eye on what is happening locally, but some of those national things definitely can affect the housing market overall. So we need to keep an eye on both national and local, and keep an eye on what is happening with interest rates. There's a chance we're hearing that the Fed may reduce rates. That doesn't necessarily mean that mortgage rates will immediately drop, because typically the market has already priced those things in before they happen. But needless to say, that will be a step in the right direction. Okay, let's jump over and take a look at what is happening in the surrounding counties. So, looking at the East Tennessee surrounding counties that we work in, August 2025 versus August 2024. In Roane County, available inventory is up 36.6%. Pending sales are up 17.8%. And the median sales price in Roane County is up 11.05%, coming in at $316,500, with the median sold price per square foot coming in at $182 per square foot. That's good news, because last month when we looked at these numbers, we talked about how 4 of the 6 counties were in the negative year over year as far as median sales price appreciation. So when we look over to the left, we can see last month Roane County was down 7.11% compared to a year earlier. They've bounced back, and now they're up 11.05% compared to a year earlier, coming in at $316,500, where last month they were at $300,000. And you can see, though, that the price per square foot in Roane County dipped from $201 a square foot to $182 a square foot, which is probably a better number for Roane County as far as what we've seen over time. There must have been some big sales in July that pushed that number up to $201 per square foot. But it is in a good place, back into the green, which is great for Roane County. Knox County, available inventory is up 33.8%. Pending sales were down 1% compared to a year earlier, so pretty much flat. The median sales price in Knox County was up just 0.65%, so basically flat there as well, coming in at $390,000. And the median price per square foot in Knox County came in at $233 per square foot. So when we compare that to the month earlier, you can see that the median sales price actually dropped a little bit. There's a little less appreciation year over year, but the price per square foot actually bumped up a little bit from $230 a square foot to $233 a square foot, which means that values are holding. When we look at Anderson County, available inventory is up 27.6%. Pending sales are up 21.1%. And the median sales price in Anderson County is up 2.19%, coming in at $350,000, with the median sold price per square foot in Anderson County coming in at $225 per square foot. Another good sign, as last month Anderson County was in the red, but now they are back in the green, up 2.19% compared to a year earlier. And you can see that they had a nice little jump in their median price per square foot, up from $209 a square foot to $225 per square foot in August. In Loudoun County, the available inventory is up 27.8% compared to a year ago. Pending sales were up 11.3%, and the median sales price was up 2.04%, coming in at $500,000, with the median sold price per square foot coming in at $242 per square foot. A pretty decent drop in the median sales price between last month and this month. It was $540,000 last month, $500,000 this month, but that will bounce around. But we can see that the price per square foot is pretty similar, $247 per square foot last month $242 per square foot this month in Loudoun County. In Sevier County, available inventory was up 16.37% compared to a year ago. Pending sales were up 2.52%, which is great news for Sevier County because we have gone months and months with them being in the negative as far as pending sales. So this is the first time that has jumped into the green for quite some time. So that is good news for Sevier County, as well as seeing the median sales price get into the green as well. The median sales price is up 10.16% compared to a year ago, coming in at $515,000, with the median sold price per square foot coming in at $274 per square foot. Pretty similar to where they were as far as price per square foot last month on the left there. In Blount County, available inventory came in at 20.8%. Pending sales came in at 7%. And the median sales price in Blount County came in negative 2.89%, so down 2.89% compared to a year ago, coming in at $387,450. So Blount County was the only county that remained in the red when we look at last month. Last month, they were down 4.15%. With the median sales price at $378,363. This month, they came in down 2.89% compared to a year ago, but the median sales price jumped up to $387,450, with the median sold price per square foot coming in at $228 per square foot, up from where it was last month. Last month, they were at $223 per square foot. So pretty consistent there. But as you can see, when we had last month, 4 out of the 6 counties that we looked at in the red as far as median sold price per square foot, in August, we are trending in the right direction, 5 of the 6 in the green. So good news, heading in the right direction. Okay, I hope that was helpful. If you have any questions about any of this information, or you have questions about your particular area, or maybe even your particular house, or you're looking at a house and you have questions, don't hesitate to reach out to us. We would love to help you, whether it's helping you buy a house, sell a house, or just answer your questions about the market here in East Tennessee and Knoxville. We are here for you. This is Troy Stavros with Cornerstone Realty Associates. Have a great day.